G'day and welcome to the Australian reporting season update. With us we have the Doctor of Dividends, Dr. Don Hampson from Plato. Dr. Don, it seemed like some tough results on the big end of town. What was your read on what happened?
Well, BHP reported this morning and the headline number, the statutory profit, was actually less than $1 billion, which is the worst for seven or 8 years. However, it wasn't as bad as that. They pre-announced $5.7 billion worth of write-downs. They've actually written their nickel operations not even to nothing but to negative. So they actually have put a $300 million cost of remediation. So basically saying it's not worth nothing. And there was a write-down of their Samarco Brazilian iron ore as well. But if you actually look at the underlying profit, it wasn't that bad. It was pretty much in line with last year at about 6.6 billion US. In Aussie dollar terms, actually more than $10 billion. So that's not a bad result to make more than $10 billion in the half. They also paid a reasonable dividend, a bit more than the market was forecasting, 69 cents. But again, that's more than $1 Australian fully franked. A bit less than last year though, but still not bad. Yields over 7%, so gross yield. So I think that's not a bad investment for Australians. They updated the Jansen Potash project. That's 38% complete and should be producing in calendar 26. And they gave some commentary on iron ore prices. They're still, despite everybody calling China down, actually Chinese demand's been pretty strong and iron ore prices have remained above $130 US a tonne for most of the half. And we also saw them say that India was a bright spot, and we've been calling out India for a while. You know, that's the next, I think, big growth area for steel is India.
Interesting. So look bad at the headline, but not too bad when you look at the underlying.
Yeah.
And the retailers, something that surprised me is how resilient they've been.
Yeah. And Wesfarmers was just another one of the retailers come out with a pretty good result, well, better than expected. And the standout there, you know, the real sizzle in Wesfarmers is not from Bunnings, but actually it's from Kmart. And the reason is that people, you know, they're marking the people are trading down, and you know, your dollar goes further at Kmart, you can buy things much cheaper. They actually made $600 million profit out of that division, which is a record for them. Their sales are up 5%. When the market was only forecasting 1%. So a bit of an increase in divvy there, only 3 cents from 91 cents to 291 cents from 88. Not really a strong yield stock, under 5% gross yield, but it's still been a reasonable performer.
It's definitely a popular one in my house, Kmart, with the young girls. Something you've been talking about a lot is Ampol and the excess franking that they've had. Yep. How has this played out?
Well, again, if you look at the headline or statutory number, it was actually down $540 million, but their underlying profit was actually slightly up at $740 million. But they did surprise the market with a higher dividend, $1.20 versus $1.05 last year, and a 60-cent special dividend fully franked on top of that. So we've been sort of forecasting that they've got excess franking. They need to get that out to shareholders. They can't do buybacks anymore, so now paid another special. And even if you don't account the special, they're on about an 8% gross yield, but if you add the special in this year, they're going to deliver more than 10% yield. Wow. So that's pretty good. Pretty high payout, but their capex is very low, so I think they can maintain this sort of payout ratio.
Okay, great. So that's 3 pretty good results. BHP, Wesfarmers, Ampol. Were there any shockers out there?
There's always a few shockers, and thankfully we avoided them, but ASX has continued to disappoint. Another one which we've been flagging with a lot of red flags has been Lendlease and construction, and they're struggling. And today Sims Metal came out with a real shocker and discontinued their dividends. So there's some of the shockers that we avoided. One that I didn't mention before, but I think is worthy of a call, is Goodman Group continued to deliver. Even though they wrote down some of their assets, actually they're going gangbusters in data centres, and they're forecasting $2 billion worth of profits this year, and their share price, as well as Ampol's, actually hit record highs on the announcement of their results. So a good result from Goodman's, but it's not really a yield stock. It hasn't increased its divvy for 5-6 years.
Okay, great to see the red flags process working, avoiding some of those disastrous results out there.
It is, yeah.
Excellent. Don, thanks so much for joining us. It's always good to have the Doctor of Dividends on. And thank you for joining us for the Australian reporting season update with Don Hampson from Plato.